Hey guys, what's up? Welcome back for another episode of the Matthew Spositi program where we talk about financial freedom and economics. Hope you guys are having a wonderful day today. The weekend is here. It's Friday, or at least the weekend's about to be here. And I'm pretty excited. Got a lot of work done this week, so I'm pretty stoked, to be honest. I'm really happy. Even after having a 6-month-old baby, it's very difficult to get a lot of work done, as I've talked about in the past. And, I'm finally having the ability to get back to produce a lot of the content that I was producing before she was born. And it's really, really great. I found ways to record 2 podcast episodes a week, or at least that's what I'm trying to do. That's not a commitment that I'm making because, well, if you've ever had children, you never know what your schedule is going to be like from day to day. But it's something I want to aspire to, and, I create a weekly market analysis video on YouTube. If you haven't checked it out, I highly encourage you to. It's a great little series that just ultimately shows you, how I come in the markets and how I ultimately analyze the markets, and kind of just, it gives you an idea of the process that I go through. And I look at all the charts ahead of time, and then I basically come to the video and show you what I was thinking, why I did what I did. And in reality, it's virtually the same thing in terms of the strategy. I'm trading one strategy right now. I'm back testing one strategy. I'm not trading with live money, but it's a really great way to show you guys how to trade the markets and all of that stuff. So, and I said it was a series. Series implies that it's going to end. It's really just more of an ongoing thing that I'm doing. Maybe someday I won't do it anymore. But I enjoy it right now, and I have no reason to stop. So I'm going to continue to do it. And hopefully, as I add more trading strategies to my repertoire, my bag of tricks, if you will, I will, of course, expand into different strategies, and you guys will get to see those. But for right now, it's just the one strategy that I'm backtesting, and I'm just kind of showing you the methodology of it all. And I keep it very simple. If you've never gotten into trading, I do not overcomplicate things, or at least I don't try to. And it's a very, very simple way of trading. So if you're interested in any of that, go check it out. Make sure to subscribe to the channel and like those videos. And hey, if you like the content, make sure to share it. And I would also ask you to do the same thing with the podcast. If you like it, subscribe, and make sure that you're sharing these episodes. Help me get this message of financial freedom and economics out to as many people as we can. I think there's a lot of people out there that need to know this type of information. Even if you don't want to be a trader, knowing the skill of reading a price chart is incredibly valuable. It just is. If you know what you're doing, if you know how to invest, if you know how to trade, even if that's not something that you want to do professionally, you can still know what's going on when you hire somebody else to do it. You can know whether they're good or bad at it. Right now, a lot of people hire, financial advisors and a whole host of other people to manage their money, and they have no idea whether these people are good at their job or not. They just hire anybody. And yeah, there are good financial advisors out there, and there are financial advisors that are quite terrible. I do have a financial advisor, however. He's a nice guy, and he seems to know what he's doing, but, I don't really use him for investing purposes. I use him to have a savings account that is essentially out of sight, out of mind, so it constantly grows, and it's really, really helpful with regards to saving money. The account is not easily accessible to my wife and I, so it can take a day or two just to get the money, but that's so helpful when it comes to saving. When the money is not easily acceptable via a debit card or even a credit card for that matter, which that was not really your money, that's the bank's money. But in that situation, it's much easier to save. So, but that's not really the topic I wanted to discuss today. I really wanted to discuss the negative oil prices that we're seeing on March 20th. So that was Monday of this week. And it wasn't negative prices of oil across the entire board. It was just negative prices of a May future contract on the Chicago Mercantile Exchange. So what is a futures contract? First and foremost, a futures contract is a contract that says that I'm going to take ownership of a certain amount of commodities at a certain date in the future, okay? This whole process, the Chicago Mercantile Exchange, has been around for a very long time, and it was, for the most part, it was used a lot by farmers. The main reason was to lock in prices in the event that they thought prices were going to go higher or lower. They would go ahead and lock in prices at the current price level today so that they don't really have to worry about price fluctuating on them in order to get the seeds and in order to grow their farm. I think another situation is if they were worried about prices going up higher, they could lock in a higher price in the future, because if there's the thought that it's going to go higher, you could lock in a price at a different rate as well. I don't trade on the futures market. I have a basic understanding of it, but that and I could be wrong. If any of you are out there that trade futures market, please go ahead. Do not hesitate to tell me that I am wrong. Feel free to correct me, but I think that's the general idea. The idea is locking in a price now so that you can be sure of your the prices are not going to fluctuate too much on you, or sometimes it's a way of getting ahead of the price fluctuation. So there's lots of different things that can go on there. And it's not just with regards to farmers, although that's how it kind of originated. Right now, you can trade almost anything from milk to live cattle to rice, grains, wheat. All kinds of commodities are available on the futures market. So I like to think of the futures market as the commodities market, because that's more or less what it is. And there are future contracts that you can buy for other things. Like there are future contracts for indexes and stuff like that as well, like the S&P 500 and stuff like that. There are future contracts, I also believe, for Bitcoin. So there are future contracts for other things that are not actually commodities, but I tend to think of the futures market as more of the commodities market. That being said, I really wanted to talk about, like I said, the negative oil prices that occurred on Monday. Now, they occurred for a May future contract that was coming up to expiration. And in reality, during the time that these contracts come up to expiration, it's not uncommon to see price volatility. It's not uncommon to see prices, going high and low within very short periods of time. It is, however, uncommon to see negative prices. And it's kind of a telling sign of the future economic outlook that we're looking at here. But we'll get into that in a little bit. So let's go ahead and talk about what exactly happened and why did prices go lower into the negative territory. I mean, why would somebody pay you to take oil? So in this kind of situation, what really is happening is when manufacturers and producers are facing a situation where demand has fallen. I mean, this is a supply and demand issue. And when they're facing a fall in demand, and it is too expensive or impossible for them to stop producing, then the logical assumption is for them to dump the product, because it's expensive to store the product. They have to store it. They have to store it a lot of times in a controlled environment, so it can't be just stored outside in the heat or in the cold. It's got to be stored in a air-conditioned area where the environment is ultimately safe for the storage of this oil. Not to mention, there's probably a lot of regulations. You can't just store oil in your garage or something like that. I don't think you can. Could be wrong with that, but even if there aren't regulations, it would not be advisable to store massive barrels of oil in your garage. You need to store them in a safe facility that is kept under lock and key, and it has and where the climate is ultimately, I would imagine the climate is controlled, or at least it's protected from the weather, right? Well, this is expensive. This is not cheap. It doesn't come free. And when you're storing a lot of oil, it ends up costing you more to store, and it increases your losses. Why store something that nobody is buying? You're going to you're already losing money by producing a product that no one's buying. You're going to add fuel to the fire, essentially, by storing it and paying the cost to store. This is actually why a lot of dairy farmers are dumping a lot of their milk currently. It's kind of a similar situation because all the restaurants are closing, or a lot of the restaurants are just not operating and they're not buying as much dairy products as they were before. As a result of that, the dairy farmers are seeing a massive drop in supply for their products. So what they have done is they decided to dump the milk, because it's very expensive for them to store. Now, a lot of people are going to criticize them and say, oh, well, why don't you donate it? And why don't you donate that product, man? And, well, in reality, these idiots that are saying this, they have no idea how to operate a business, right? The real reason why they're not donating it is because they don't have the channels to do so. And in order to create the networks and the channels to donate it, costs a lot of money. And these dairy farmers simply do not have that money. Now, a lot of people are like, oh, yeah, well, what about the automotive manufacturers? They retooled their machinery, or they, retooled their factory so they could produce ventilators. It's like, yeah, but they were paid millions of dollars by the government in order to do that. I mean, sure, if dairy farmers were paid millions of dollars by the government so that they could donate their milk and not have to dump it, yeah, sure, they would probably do it. But it costs money to do these things. You can't just do anything you want on a whim when you're in a business. And it makes me so angry because it's just people who say that they have no idea how to run a business. They just don't know at all. So it's just really funny to see people make those kind of claims because it's like they don't know what they're doing. And they have no idea what's really going on. But yeah, you can't just create the channels and the networks. I mean, it takes a lot of people to do that. You got to hire the people to create that. With regards to milk, I can guarantee you it needs to be refrigerated constantly in order to preserve the life. I mean, I know that when I buy a gallon of milk at the store, I got maybe a week and a half before the milk expires. And I mean, that's not including the time it took to get that milk jug from production into a finished product and then get it on the shelves. I'm only getting it after I buy it. I mean, how long? I mean, they have gone through a great amount of trouble and a lot of investment to be able to get the milk to survive all the way to your house and then give you time to consume it once it gets to your house. So there's a lot of stuff that plays into this that you really people who talk like that, you really want to ignore them. They're just dumb. For lack of a better term, they're just idiots. Don't listen to them. They have no idea what they're talking about. But anyways, so a very similar thing is happening in oil. Right now, you've got a lot of production that's happening. It's very expensive or impossible for them to stop production. And there's not enough storage to go around. Either there's not enough storage or it's too expensive to store the product. So in that environment, you wouldn't want to essentially, you don't want to hold on to the oil. So you're going to offer to pay people $37 to take it off your hands, which is a wonderful deal, by the way. I mean, I would love to get paid $37 to have the oil taken off my hands because I know that oil prices are going to rise at some point in time. Granted, oil has kind of been in a bear market for a while, I believe, although I honestly haven't looked at the charts. I should probably look at the charts before I go and make that statement. I've heard that there have been articles that have been produced saying that oil has been in a bit of a bear market. And I do believe that it's true. There's a kind of a oil production war going on between, Russia and I believe Saudi Arabia? Let me see real quick. Yes, Saudi Arabia. So, as a result of that, there's kind of an oil price war where they're constantly trying to, Saudi Arabia, well, actually, there are a lot of Arab nations or Middle Eastern nations that are trying to, reduce reduce oil so that they can go ahead and sell it at a higher price. Whereas I think Saudi Arabia and Russia are essentially trying to produce to, kind of in a price war at this moment. Right now, the oil prices did not stick. They went all the way down to negative $37.63, and they bounced up to $17.29, I believe, before the contract expired. Actually, I don't think the contract has expired, but it didn't stay negative for very long, and it probably won't stay negative for very long. Negative prices do occur. They have occurred with electric energy. In California back in, I think, 2016, 2012, and 2014 all have had negative electric prices in California for various different reasons. I think a lot of it's because of the wind farms and the solar panel farms and stuff like that have produced an oversupply of electricity. Some years it's better. Some years, the electricity costs are totally in the negatives for a very, very long time. But, another thing to keep in mind, though, there's more to it than just that. In this particular situation, you are dealing with future contracts. And the traders that are involved in those future contracts don't want to take the possession of the oil because there's not enough available storage. Because we're in a glut of oil due to the massive oil production that everyone is engaging, or at least a lot of countries are engaging in, I believe our country as well. Because of all that, there's not a lot of available oil storage. So there's a lot of, traders who are kind of playing hot potato with these contracts, right? They're trading them, they're making money, and the guys who are left with these contracts are facing the notion of, oh crap, what am I going to do with it? Where am I going to put it? So they're like trying to offload it as fast as they can, man. They are trying to, before the contracts expire, when the contracts expire, they have to take ownership of the product. So they're like, oh no, we got to do something. I'll pay you to take it from me, because they know that there's not going to be a lot. It's going to be very difficult to find storage for that product. And eventually it's going to be so difficult that it probably would cost them more money to store it than it would to actually take ownership, or to offer it to be for someone to take it off their hands for them paying them for it. So anyways, that is more or less the reason why oil is going under. But this has a very telling story behind it, much more so than simply just negative oil prices. Negative oil prices are not a positive thing. When you are seeing demand drop, for whatever reason, we know that right now people aren't traveling, so airliners are not buying massive amounts of oil like they used to. That manufacturing in China and a lot of other places have kind of closed up shop. China is kind of getting back to production, but I don't think they're at 100% like they were before. Again, that is going to result in a massive drop in oil. People are getting out less and less. They're trying to social distance. They're not driving as much, not going to work as much, for at least with regards to the people who can afford to not go to work and they can work from home type of situation. These people are not consuming as much gasoline. So it's very, very important to know that when there is a drop in oil, oil is oftentimes looked at as an economic indicator. If oil prices are high, it means people are traveling, people are buying production, manufacturers are producing, people are buying that production from the manufacturers. Cars are being made, steel is being made, buildings are being built. Oil prices have so much impact on so many things that we do today that when oil prices are high, times are considered to be good, right? Economics is considered to be healthy. It's not always that case, because we have to ask ourselves the question, this consumption, is it driven by savings and production, which is healthy and long-lasting, or is it driven by debt, which has an expiration date on it? Which, I'm saying that facetiously, but, the debt has to be paid. And it will reduce your consumption in the future because you have to pay that debt. If it's being produced by debt, then sure, it can continue to go until a shock like COVID-19 comes around, or it could continue to go until a shock of something happens, and for whatever reason, demand drops and falls through the floor. So a debt-driven economy is not a healthy economy. But anyways, that's another episode for another time. The fact remains is that if oil prices are high, it's considered a good economic sign. It's not the only indicator that you want to look at, of course, but it is considered a good economic sign. Ships that basically carry product from other nations to ours, for whatever reason, the name is escaping me at this moment. But those ships, they require oil to operate. So in the end, there's so many uses for oil that when you see negative prices, that is a very, very bad sign. It means that demand for oil has dropped through the floor. And I know that the price has already recovered to $17, per barrel, I believe. I think is it $17 per barrel? I'm not exactly sure if this is per barrel or what measurement this is for. But anyways, I guess it doesn't really matter. The fact remains is that this is an extremely telling sign. This is a bearish indicator. This is not a good sign. So if people are not consuming oil, it means that people are not consuming the stuff that they traditionally would otherwise. They're not traveling. They're not buying as many manufactured goods. They're not driving their cars as often. Maybe they're not even buying goods online from overseas as much. Which I still think that, consumption with regards to online e-commerce is pretty high right now. But as people start to lose more and more jobs, that's not going to always stay. But there has been a very significant drop in demand. And this is not a healthy sign. This is not a positive sign for the economy. This is a very bearish sign for the economy. And I think we all need to understand what the negative oil prices are actually telling us. Because it's important. It's incredibly important. Not just with regards to economics to understand why prices would sometimes go negative, but also to understand that the drop in demand and what is causing that drop in demand. So it's incredibly to understand this, guys. So the drop in negative oil prices is largely because of the drop in demand. The drop in demand is because of all the government intervention that's been happening on a global scale. Governments around the world, state governments in the United States are all telling people to close up shop with regards to their businesses. They're telling people don't get out. They're telling people to stop consuming, essentially. Now, I'm not trying to say that consumption drives the economy. You know very well that that's not my opinion. My opinion is that savings and production is what drives the economy. You need savings. And that is what drives the economy. Consumption is merely a healthy byproduct of a healthy economy. Now, the only reason that we have a lot of consumption today is because we have a lot of different ways of kicking the can down the road, so to speak. We have credit cards. We've got loans, payday loans. We got all sorts of ways that we can consume today. So it's just one of those things where you need to keep that, all of that in your mind, is that we are not in a healthy economy today. And when you're seeing things like this, negative oil prices, first of all, it is incredibly interesting and fascinating because, people who've been in the industry for 40 years, and there are people that haven't ever seen negative oil prices. There are people that have been maybe even, in this Market Watch article that I'm reading from, this guy is saying, I'm not sure how to react to that other than to say that nobody, whether they're 120 years old or whether they're 20 months old, has ever seen an oil price lower than this. And this is a guy who was a 40-year market veteran and head of global market analysis for Oil Price Information Service. So not only is this a very fascinating event to see, and it's good to understand the economics of it all as to why producers or why people would pay you to take them, especially the traders and whatnot, and to understand the trader's perspective, understand why businesses would do this as well. It's not just that idea, but it's also it's incredibly important to understand because you need to not just look at it from those individual perspectives of those particular industries, the trading industry and then the industry of the business owners, right? You need to understand the overall economic impact of this. Negative oil prices are not going to cause anything to happen. Negative oil prices are the symptoms of an underlying disease of something that has already happened or is happening or is going to happen. It's a symptom. And the symptom is a drop in demand. And the drop in demand has been caused by government intervention, not by COVID-19, by the reactions of COVID-19. So anyways, guys, I don't want to end this on a negative note. If you guys are worried about this kind of stuff, go check out my YouTube channel. I got a lot of free content on how to read markets. Maybe we'll even cover the oil price. Maybe we'll actually look at the West Texas Intermediate May contract or contracts, and maybe we'll actually look at those prices or whatnot. Maybe we'll do some analysis on that kind of stuff next week. I don't know. I'm not going to go ahead and commit to looking at oil, but we will be looking at charts, and I will be showing you how to read charts and how to understand them. And I do this week in and week out. So if you guys are interested in that, please go check that out. Also, don't forget to check out my website, newmillenniumwealth.com. I post a lot of really great information on there, articles to understand how trading it works, articles to understand how you can become financially free. And guys, look, your success, if you want to try to avoid the kind of stuff that's happening right now, the economic calamities that are occurring or may occur in the future that I think that we're just on the cusp of, you need to become financially free. so that you don't have to worry about that. Control the source of your income. And the only way to do that is to own your own business. Whether you are a trader and you're coming up with a trading strategy that's going to make you money over time, that would be an asset you would be controlling. That would be a source of income. Whether you want to create an educational product that you sell online, maybe you have a skill that you know that people would like to learn how to do, so you create a course and whatnot, and that would also be controlling the source of your income. But you need to control the source of your income. That's how you can decide that you're not going to ultimately have to worry about this kind of stuff. I hope you enjoyed this episode. If you did, make sure to subscribe. Make sure to share the show. Get this message out there of financial freedom and economics. You'll do that for me. I'll see you guys in the next episode. Remember, know the risks, plan accordingly, and have a great day.